From how tariffs rattled earnings season to an unexpected fall in US GDP, this is the week in numbers. About 40 firms worldwide pulled or cut forward guidance during first quarter earnings season. Companies from multiple sectors felt the heat as US President Donald Trump's trade war spread through the corporate world. Auto majors General Motors, Volvo and Mercedes-Benz ditched their outlooks, as did most US airlines and tech major Samsung. While United Parcel Service said 20,000 job cuts were on the way to lower costs, citing the biggest potential impact to trade in a century. 0.3% was how much US GDP fell during the first quarter, meaning the economy contracted for the first time in 3 years. It deepened concerns over the impact of President Trump's tariffs. Trump deflected blame for the unexpected contraction and said Americans should be patient. He further said his tariffs would eventually lead to an economic boom. Up to $5 billion was how much General Motors warned tariffs could cost it. The US automaker also cut its profit outlook for the year just days after pulling its previous outlook. Trump had moved to soften the blow of auto tariffs on US car makers earlier in the week. He signed orders walking back some levies.
We just wanted to help them during this little transition, short term. And during this little, if they can't get parts, it has to do with a very small percentage. If they can't get parts, we didn't want to penalize them.
$42 billion was Meta's estimate-beating revenue in the first quarter, shaking off fears of an unsteady economy or AI slowdown. It wasn't the only tech giant to beat projections, as Microsoft saw stronger than expected quarterly growth. Its Azure cloud division was a key driver as it grew by a third. But another US tech leader, Apple, warned tariffs are expected to cost it an extra $900 million this quarter. That as the iPhone maker tries to shift its vast supply chain to minimize the impact of the trade war.